Knowledge gives you control and it gives you power over fear. It gives you power over anxiety. If you don't prioritize investing or saving money, of course, more than likely, you're not going to be saving or investing. I'm looking for taking on the least amount of risk possible while getting the most optimal rate of return with, relative to that risk level.
That in what I do is what I refer to as prudence. Good morning and welcome to the HopeFilled Financial Podcast. My name is Jay Desberger, your one and only HopeFilled Financial Coach, and I'm happy that you're here with us today. Today we are joined by Kolin, also known as the Decade Investor. Thank you for joining me on the show today, Kolin.
Yeah, thanks for having me. Excited for a great conversation.
I would think that there's a curiosity as to how you and I got connected. I was asked to do an interview with Tom, the savings captain, and I believe you were as well.
Yes.
Now, what did you and Tom get to talk about? I'm afraid I haven't heard your interview with Tom yet.
Well, actually, I was on his show, and then he came onto mine. Specifically on my show, he talked about his long-term investing mindset and how he hasn't sold one of his shares in like thousands of days. I don't even remember the exact date, but he keeps a running count of how long he hasn't sold a share. And then on his show, we talked about my long-term investing philosophy, my investing story, how I got started investing, and why I enjoy not only doing it, but also sharing it publicly via the Decade Investor social media channels.
Of the social media channels you have, which one is the best one for someone to follow you if they have no preference?
I would say Twitter or X, whatever they call it nowadays, would probably be the best. But I'm also on Instagram and YouTube as well.
Okay, so if after this conversation you're inspired to follow Kolin, be sure to give him a follow on X. As we get started, I'd like to ask you, what is super unique about your particular story when it comes to money, your money journey?
Yeah, I don't think my story is necessarily unique. When you sent me over the questions, I was trying to think about what made my story unique. I don't think it's like anything unique in the sense of I got lucky, hitting it big on one stock or hitting it big on a cryptocurrency or anything like that. I think my journey with money and my story has been the norm in the sense of I follow a very simple process. I make money, I spend less than I make. I enjoy the fruits of my labor, but that difference of the money I make and the money I spend, I put into assets that are going to grow my wealth over time. Now, the uniqueness, if you wanted to find uniqueness in my story, is I'm currently 25, about to be 26. But when I was 20, it would be 2022. So whatever the age that puts me at, year 2022, I started an online educational platform that I have since sold, but it did really, really well in terms of cash flow. So my income has been really, really good. But no matter what is my first job out of college, making 50 grand a year or making six figures and beyond online, the strategy I followed has always been the same, which again is to make money, spend less than I make, enjoy the fruits of my labor, but then with that difference, go out and buy assets with that money.
I mean, that's great wisdom that you have in your story. Live on less than you make and invest. How do you make that exciting for someone who hears that and is like, well, I want something that's a little bit spicier, something that's got a little bit more zing to it?
Yeah, I think, if you're looking for spice and zing, you might want to go to Las Vegas to the casino because truth be told, what I found with my own study and also talking to people like you and other investors and people that have done really, really well investing is it's usually not going to be spicy and zing, especially about the investing side. Now, how you make your money if you own a business, if you do it through a W-2, whatever it may be, that's where the spiciness can come into play. But the actual process of investing in and of itself, at least the strategy I follow, and a lot of people do, which is low cost index funds and ETFs, to me at least, is not the spicy zestiness that you're looking for. But I know it works, and I know it's been tried and true, and that's what I'm going after.
So when it comes to something that's exciting, that excitement might be due to it being more risky. and something that's a lower risk but giving a higher rate of success isn't as flashy, it's a little boring, and that's the kind of thing that you enjoy teaching about.
Yeah, I mean, like I said, I'm about to be 26, and a lot of people my age, just looking at society as a whole, they want to go after the quote unquote not so boring money making or investing styles, right? They're trying the high risk cryptocurrency, the high risk day trading. They're doing sports betting is becoming a phenomenon as a way to, as an investment, quote unquote. I've seen it being told, and to me, I went against the norm, and I guess that's what kind of makes my style unique. Is I went against the norm, and I'm looking for taking on the least amount of risk possible while getting the most optimal rate of return with relative to that risk level.
That in what I do is what I refer to as prudence. I typically talk about a foundational virtue for personal finance, namely frugality. It's the intentional practice of prudent economy. And prudence, I typically talk about as being the understanding of how to not expose yourself to undue risk, either risk that's too much for you to take on or risk that you can avoid. So you mentioned that you used to have an online education platform or your own business of sorts. What next steps are you taking for your career?
Now I'm actually getting into the financial services industry. And the main reason for that, and I don't want to get too in depth in it, but the main reason for that is because I really want to make a change personally in people's lives, especially when it comes to investing. And when you want to talk about investing to people like securities and you want to get paid for it, you have to be licensed and there's a lot of regulatory thing. And to give that personal recommendation that I want to do, that was the route I needed to take. And so currently am in that transition process to move forward with becoming a financial advisor and a financial planner, and be able to actually make that change, especially in the investing side and security side with people. So that's kind of the route I'm taking now.
Well, that's exciting. Are you going to be sharing your journey of to like what it's like becoming a licensed financial advisor?
Yeah, I want to kind of share the journey and show people behind the scenes because and another reason I want to get into it is because there's a negative connotation, at least outside, about financial advisors. They're just salesmen, they're insurance salesmen, they're just taking fees and not helping you. And while that is true, that is not a blanket statement for everyone. And I kind of want to be a change in that. And I know it's going to be bigger than just myself, but if I can make that a little bit better, I feel like I did my job. And so yeah, I will definitely share my journey through that as the business side, but then also the journey of helping people win with their money.
So is helping people win with their money the thing that motivates you the most, or is there some sort of personal story that's driven you to really go whole hog with your career on the money stuff?
Yeah, it's a good question. I mean, I really, obviously, like money, love it or hate it, does revolve around our lives every day, right? And what I've come to realize in my short, let me step back. I started investing and understanding money at 17. So even though I'm 26, in terms of time, it's 9 years, about to be 9 years. So at 26, that's a long time of my 26 years, 9 years. And so what I've realized is so many people just are either uneducated or they're educated, but they don't know where to go, right? They don't understand. And so, yeah, of course, money is a part of our everyday lives. And when I kind of had that aha moment of, oh, this is how you build wealth. Oh, this is how, the wealthy people or the quote unquote rich get richer statements, these are how these occur. Once I understood that, it was like my aha moment. And I realized that so many people don't understand that. They don't get it. And again, maybe it's because they've learned it, but they don't care to try. That's one reason. Or maybe it's a lack of education or lack of understanding. How can I fill that void of helping other people get that aha moment that I had? And that's kind of what drives me to not only wake up every day and get on social media and share what I've learned and share stories and do podcasts like this to get, the understanding out for other people, but also what inspires me and drives me to actually want to help them on a personal level too.
That is inspiring. And it leads me to asking the next question, which is about your philosophy about investing. And so I want to know, what is your philosophy in a nutshell? If a client were to come to you as a financial advisor in the future and say, what is your philosophy about money and where does it come from? What's your answer to that?
It's a long-term mindset, right? I think what happens for a lot of people is they get caught up in this. I have a tagline, build long-term wealth in a short-term world. And so many people get caught up in the short-term that we see, mindset that we see in society today, that I personally believe that, with investing specifically, you have to think long-term. In 20 years, I'm going to be 46 years old, right? At 46, I can end up with, I can have $0 invested because, what's $100 a month or $500 a month at 26 going to do? It's not real. It's not $1,000,000. It's not worth it. Or at 46, whatever that turns out to be, I can have a nice sum of money that can allow me to have freedom to decide what I want to do with my day, decide if I want to work or not, decide if I want to take the day off because, I have children at the time and I want to go hang out with them that day, right? I want to have those options, not today, because I understand it's not going to come today. It's going to come with a long-term mindset in the future. And even at like 50 years old, someone who's 50 years old, odds are, statistically speaking, you're probably going to live to 70, if not even longer than that. So 20 years might seem like a long way away, but that is still a good amount of time to get started investing. So it's never too late to even start either.
I think there's something that you said there that really stuck out to me. And that was, 20, 30 years down the road, being in a position where you're working, and I'm paraphrasing here, being in a position to be working because you want to, not because you have to. Is that a fair rephrasing of what you said right there in the middle?
Mm-hmm.
So to do that, and correct me if I understand wrong, you need to have a healthy financial foundation, what I've heard some people call financial independence. In your world, how does someone look at their financial situation? They're working on building that foundation. How do they know that they have a healthy financial foundation?
I think there's two ways to look at it, right? You have the numerical side. So you can, we can put numbers in a calculator and say, all right, in 20 years, I would love to have this much in my investment accounts. Okay, now work backwards. I need to save or invest this much money every single month, assuming, let's say, an average return of 8%. Okay, in 20 years, I'll have that amount, right? So there's the numerical side of the foundation, but then also the psychological side of, okay, I know every single 2 weeks or every month, however often I get paid, I automatically or have a system in place where this percent of my paycheck goes to this goal. This percent of my paycheck goes to my emergency fund. This percent of my paycheck goes towards my 401k, my Roth IRA, this taxable account, my child's 529. However, you have it routed out, and everyone's gonna have a different scenario. But the foundation of, I know my money today is being siphons, maybe not the right word, but being moved around correctly through different accounts that I've set up and automated to have that A, foundation set. So B, when I get to that 20 years from now, whatever goal I had, I'm going to, you might not achieve it because the percent returns of the markets are not guaranteed. But if they're around kind of what you're predicting on an average, hopefully they're roughly near where you wanted to be numerically. So the foundation is the number side. Okay, I know the big picture. Here's where I want to be. But then the psychological side of, I have my systems in place with my money so that as long as I keep my income or my job where it is, and maybe it'll grow, maybe we'll get some promotions, but at least if that's set in stone, everything else will fall into place.
So what I heard there was, in the long term and the short term, you have a percentage of your income going to these different goals. And when you have that established, you can better have information to know how much you actually need as you're moving forward. And that knowledge gives you control.
Yeah, knowledge gives you control, and it gives you power over fear. It gives you power over anxiety. And of course, it's not going to remove it. For most people, right, even if they have the systems in place, there is that sense of fear and potential anxiety and those things. But it's going to remove that fear and anxiety, a lot of it, right? That power over those emotions, because, hey, as long as I keep what my job is, which is to keep focusing on, bringing in income every single month from my job and I do good there or my business, whatever it may be, everything else will fall into place.
So let's say we have a listener out there right now who is hearing this. They want to get involved with the investing, but they feel like they're they're having a hard time with an earlier step, living on less than they make, and they feel like they're spending everything that they have in the short-term stuff. They don't have enough extra to invest. In your world, in your words, with your philosophy, how do you limit the lifestyle spending, the fun spending in order to free up the room for investing?
It's your priorities. And I know that's easier said than done just to say like, oh, these are my 4 priorities. Let me just switch these this way. Like that's just not an overnight fix. But if you don't prioritize investing or saving money, of course, more than likely, you're not going to be saving or investing. And so it starts with a priority switch. And that probably starts with an understanding of, hey, spending more than you make is probably not a good idea. You're setting yourself up for a disaster financially, potentially. So it starts with that. But then once you have that priority switch, then it's like, okay, if I'm constantly spending more than I'm making, that's probably due to a credit card, right? Because with a debit card, if you go and you have $5 in your account and you go try to buy a $7 candy bar and a burger and fries, probably going to decline, right? More than likely. So you can't really overspend with a debit card. It's probably with a credit card. Now, I think, I'm not in the camp of all credit cards are bad. I think if you can handle and you have the discipline, you can have a credit card as long as you pay it off in full. But if you're in a scenario where you're constantly overspending, you're constantly, you bring home $4,000 a month and you always spend $4,300 or whatever, you're always overspending. It's probably due to a credit card. You got to get rid of it. Like to me, that my philosophy is cold turkey, right? We have to attack the problem, because the longer that you push it off, the longer you say, oh no, I won't overspend. Odds are it's really hard to break habits. Odds are you're probably going to continue to overspend due to that credit card.
You said something that made me laugh. I just recorded an episode that's coming out after this one, where I talk about taking control of your money and how the credit card is the one tool that allows you to easily, without friction, outspend your income. And I said, if you're not willing to cut it up, take the card, drop it in a Tupperware, and pop it in the freezer. And that way it's stuck in a block of ice. And you said you're about quitting cold turkey. I'm like, oh, there's a pun to be made there, and I totally missed it. So if you're talking about quitting cold turkey, are you talking about literally freezing the credit cards, or are you going to break out the giant scissors and, in Dave Ramsey's words, do a plastectomy?
Yeah, I'm Dave Ramsey's world right there. I'm thinking, do whatever you can to get the credit card out of your freezer, right? Because even, some people might not even have the discipline to put it in the freezer, and my freezer is behind the computer, so I keep pointing. To take it out of their freezer, they might still do that, and defrost it, get rid of all the ice, and still go spend it, right? Now, that might be an extreme example, but I'm in the camp of, let's just get rid of, cut it in half so you can't even swipe it at the store, or give a chance to swipe up the store until you get control of your spending. Because yes, it's possible to out earn your bad spending habits, but time and time again, studies show that making more money, if you have bad spending habits, making more money usually does not solve the problem.
And that right there is some healthy wisdom. I'm at this point now wanting to pivot. I'm curious, where does the name Decade Investor come from?
I was making YouTube videos, and the channel was not growing. And I was like, all right, I was posting videos, and I was like, this is just getting frustrating. So I got on Twitter at the time, and I needed a name. I already had like a personal Twitter account that I've had for many, many years, as most of us probably have, but I wanted to create a whole new, fresh start. And I was trying to think of a stage name, or whatever you want to call it, a pen name. And I kept saying in my YouTube videos, I invest for the long term. I think long term, become a decade investor. And so when I got on Twitter, when they prompt you to create a username, I was like, well, let's just see if this decade investor name is available. And it was. And I think it fits perfectly with what I talk about in my philosophy. And it was available. So from there, I just have never, just thought about changing it, and it's kind of stuck.
With decade investor, I think long-term mindset. That's your philosophy. That's the brand. I think it's clear. How can someone shift a short-term mindset to a long-term mindset if they see this, they hear this conversation, they're like, I want to be thinking long-term. Okay, what do I need to do internally to do that?
Yeah. I think I always revert back to a quote, and I want to say it's Bill Gates, who said, most people will overestimate what they can do in 1 year and underestimate what they can do in 10 years. And, me being, again, bring up the age again, but me being 26, I've only lived 2.5 decades of life, but I really have seen that quote live in my life of, if we think in 2024 is going to be the year that you make millions of dollars or the year that this happens, odds are probably not. But if you just stick with it for 10 years, you'd be surprised at what you can do. Like for me, I've been creating content on social media for just about 4 years now. And, in 1 year, 1 year from when I started, yeah, I had some followers and it was fun. But like, if you had told me just 3 short years later to today that it would have almost 200,000 followers on one platform and 20,000 on this and podcasts, all these things, I would probably say no way. But I just kept sticking with it, and so that shift is not as easy as just waking up tomorrow and being like, all right, that's it. I'm done short term thinking. I'm going to start thinking long term. It's not that easy, but when you start to realize that if you want to do something great in life or you want to achieve something that most people don't do, which is, become financially free, start a business or whatever it is, most people just live in their box and that's it. If you want to do something different, it's going to take some time. And if you quantify success as what it looks like in 1 year, you're probably going to be let down, but you'd be surprised if you stick with it for multiple years, what you can accomplish.
And that makes me think about something a question that I've been trying to answer. Maybe it's something that we can cover in a future episode if we want to have another conversation. But the difference between having patience with a long-term mindset and having too much patience. How do you know when you've pushed yourself into being too patient for something and you need to be taking more action that's a little bit more active or in the short term? But the next question I have for you for right now is, what do you think is harder? Getting into a long-term mindset or sticking with the long-term mindset?
So when I read this question, at first I was going to say getting to the long-term mindset, but then I thought about it for a few minutes, and that's not the answer. The answer is sticking with it, in my opinion, because like I said, that shift that I had of thinking long-term, it wasn't an overnight thing, but it did come pretty quick once I realized and hey, I want to think long-term. The hard part is whenever, like, if we pertain it to investing, right? All right, I'm going to think long term and go with low cost ETFs. All right, now I have to do that for this year, the next year, and the next year, while simultaneously you go through social media and you see this guy or this gal standing up in front of a Lamborghini saying, I'm going to teach you to day trade 1,000 and do 100,000, right? And it's so easy to, well, my, quote unquote, boring portfolio is only up, well, in 2023 was up, the S&P was up like 22% or 24%, but, that's not good enough for some people.
You talked about the guy standing there with the Lamborghini and saying, I make this much and it's got to be this. It's the get rich quick message, right? How can it's everywhere. It's absolutely everywhere. It's almost impossible to escape. Do you think it would be helpful to separate ourselves or remove that from our day to day in order to help us maintain a long term mindset? And do you have any ideas on how to get rid of it? Because I don't have a lot, and.
Yeah, I don't know, sadly, if you're, if it's social media and you follow like myself or uh, because they follow you, the ads are going to feed them because they're interested in money and investing, and then the people that create the ads are targeting you as the scroller through the feed. So it's hard to like necessarily get away from it. What I think you have to do is really like I'm a big numbers person. I know you are too, Jay. Like I look
Hmm.
at the data, right? And I'm like, if we're talking about these high risk day trader Lamborghini guys, right? That they're like, hey, I'll teach you how to do this. Join my paid group. What I found is statistically speaking, I don't even know the numbers. Like every study is different, but it's 90. I've seen upwards of 98% of day traders lose. Like they don't make money over the long term. And to me, it's like, is it worth it to pay all this money to try to get rich quick and be that 2%, that, you're just following a guy or a person that's telling you what they're doing? Is it worth it to pay all this money to do that, or do something that gives you really high probability of succeeding and growing your money? And to me, it's not the flashy, like we talked about earlier at the beginning, it's not the flashy, spicy route, but it's the one that works. And, I'm going to make a really bad analogy here I just thought of, but like I would rather have the 1997 Ford F-150 that's all rusty, but it's going to get me home versus, this highfalutin, sports car that breaks down in 2 miles, right? Like I would rather have the tried and true, because to me, that's what I want with my money. I want to take the least amount of risk with the most optimal outcome, potential reward relative to that risk, where I can grow my money, and not wake up at 2 a.m. in the middle of the night worried about this high risk day trade that I made.
The most reliable path to success is not the one that has the highest potential for the biggest payout, if you will. I love that car analogy. I don't think that was bad at all. I thought that was brilliant. And
I
wait
just came
a
up with it.
oh, that was I'm smiling ear to ear with it because it's making me think of all sorts of car stories I've got. If early on in my show, before I had any experience with this, I talked a lot about a lot of painful car stories. But as we're wrapping up here, I got one more question. What top 3 habits would you advise listeners to pursue this week to better their future?
I think number one would be, there's a book I recommend, actually 2 books. I'm going to use 2 of the 3. So book number 1 is Millionaire Next Door. The reason I recommend reading this book, it's probably like 10 or 15 bucks on Amazon. But the reason I recommend this book is because when most people think about millionaires or wealthy people, they think of the private jet, Lamborghini, mansion, jewelry, all this stuff. When truth is, most people are going to be the quote unquote everyday millionaire next door, that, they can get it as an accountant. They can get it as a teacher. They can reach financial freedom. That book, Millionaire Next Door, really shows you what the millionaire next door, how they live their lifestyle. It's not like what you see on TVs. The second book I recommend is called Just Keep Buying by Nick Majuli. It's very data-esque focused, which I like, and I know Jay likes too. But it really hones in the point that if you're thinking long-term, the most optimal strategy, if you're buying broad market ETFs, is to just keep buying. Most of the times, on social media specifically, I see people, hey, is this the right time to buy? The market's at all-time high, should I buy? Or the market's at all-time lows, should I sell? Or not all-time lows, but it's at recent lows, should I sell? And this book really just provides some data to back up, like, hey, sometimes the best strategy is to just keep buying. So those would be my 2 habits that people could pick up, or 2 things they could do this week. And the third thing is to, I believe wealth building specifically is more mindset than anything else, in terms of, especially early on, you have to change how you think about money. And so I really want you to, this week, whenever you have a thought about money, whether it's you're going to buy, fill up your car with gas, whether you're going to buy something from Home Depot for your house, or going to buy food, whatever it is, I want you to really understand the flow of money, how it works. But more importantly, I want you to understand, why did I make this purchase? Was it a necessity or was it a want, right? And we talked about earlier about, that person that's overspending. Do we cut up their credit cards? What's the route we take there? Is whatever you're more conscious and aware of how I'm spending my money, it helps you understand, okay, maybe I'm spending too much here. Maybe I'm not spending enough here. Am I buying this because I really like it? Or am I buying this because Tommy next door, just bought it and I want to be just like him, right? Whenever you're aware of your spending, when you're aware of how money flows, it allows you to then be in the mindset of, okay, now I understand this about my money, about how the flow of money why I'm making purchases I am, now I can start to build wealth. Now I can start to realize that, hey, maybe this decision about money isn't the best. I can take that money and put it towards paying down this debt instead, because that's what's actually going to move the needle forward for me, not this, thing I'm buying from whatever because the person next door bought it. So that was a long-winded way of saying just be more aware of your daily spending and how money flows through our lives. Just because once you're in that mindset, it really allows you to, change the mindset about money, and then you'll see those changes reflect in your investments and in your net worth.
I'm impressed that you were able to explain that, walk through some examples without using the dreaded B word when it comes to personal finance, the word budget. And I think that's going to be a nice segue for my tagline as we wrap up. But thank you, Colin, for joining us today. Thank you for your time. I sincerely appreciate it. And I hope you all appreciated it too. And remember, until next week, until next Tuesday, budget bravely and enjoy your hope-filled financial future.